Welcome to Business Doctor. This is Gokul. Today we are going to talk about something related to business. And in a business, you may be producing a product or you may be doing a service. And for that, you will have quite a lot of resources. You will have human assets, you will have facilities, infrastructure, employees, and so on and so forth, including money. That's all okay as long as things are in the right direction. But we didn't discuss about one important thing. That important thing is the primary one, which would cause a business failure, or it will lead to a trap from which you will never ever be able to come out of that. That's what we are going to talk about today. And whatever I said, like resources, products, services, etc., all are secondary, whereas this one is the primary. That one is nothing but legal. Where does the legality comes? The legality comes into business using a contract. So if you are particularly doing a B2B kind of a business, and where again within that, if you are into a IT segment and you are going to be a small vendor or any type of vendor, and you are going to deal with somebody else in the either in a chain or a level up to a client or to a customer, where you need to be careful about legality is what we are going to discuss today. First of all, there are quite a few points which I want to tell you, so you need to be patient enough to listen to so that you don't get into this trap. The first point is that ensure you don't sign up for any back-to-back arrangement in a contract, which means that your client will pay you only if his condition is met, whether he may be part of the chain or whether he is an independent event. He is in an independent client or a vendor by himself. Then, irrespective of that, you need to ensure that you don't be part of the chain of a contract. And because very simple, you don't know whatever your client or up the chain contractor or the contract seeker, I would call that way, the contract seeker, where he would be involved in order to complete his project with his client. So you will never ever know that. So best thing is avoid back-to-back contract, and you have to ensure that there are no other third parties involved in the contract who are, when I say third party, anybody who is not signing into the contract but has got an impact on the contract. If there are any parties, then there is a dependency on that person or that company or that activity which is not controllable by you or by your client. So in that case, it is treated as a third party. Never get into any agreement which involves third party who is not part of the signatory. On the same line, the third point is you need to ensure that there are no external factors, including customer side parties or any other events or any other conditions which are not connected with your work. So that you need to ensure your contract is clear of all that. And in the contract, obviously, I'm sure I'm not going through a contract per se here, but in the contract, I hope you know what it means in a contract. So the next point is that in the intermediate time, they need to approve for your activity. Either your activity may be a proof of delivery, or proof of service, in terms of timesheet maybe, or in terms of invoice. It could be any of those process artifacts which you are expected to produce, and you have to be very clear that there should be a definite time frame for approval of all these things, including the submission and the approval, of course. So you need to submit the proof of work on time, and you should expect the client to approve on time. And you need to be very clear that indefinite or indeterminate time frame should not be acceptable for you. The other important point is, if best thing is, if you are party in the B2B sector, try to avoid. Maybe with a direct client, yeah, fine, but again you need to be very clear on the contract. But if you are going to go through an intermediary, then you need to be very clear that you have to take care of a lot of points, and it will be very difficult. So best thing is avoid a B2B contract. The other one is the proof of delivery. That contract needs to mention very clearly about what is the proof of delivery. You need to submit the or proof of service. You need to be submitting a timesheet within time frame, or you need to raise the invoice within the time frame. So it could be any of those things. So you need to know what is the template for that, or if there are any forms, probably you have to get the forms from the client, and you have to submit. And you need to know who are all the approving authorities upfront. That we will discuss in a moment. And the of late throughout the world, what is happening is that they assume, or they meaning here the client assumes that if you are doing in the month of January, then from after January you will raise the timesheet. They will take about 15 days for approval, and then you need to start off with the invoicing process, quoting the PO reference, the purchase order reference. So whether you never know whether the purchase order was primarily approved in the first place or not, and even if so, the timesheet needs to be approved. After that only you can raise the invoice, for instance. So you have to go through so many conditions to raise the invoice. From the time of approval of the invoice, the contract would say that it would take about 45 days to get paid, which will effectively turn to be 3 months. So it requires quite a lot of working capital on you, and you need to be extremely careful on this point, so that you bargain with your client that whatever may be your process, that's fine, we will try to comply with that, but irrespective of that, you need to pay the said money within, say, 15 days, 20 days, whatever is your comfortable timeline, that you have to insist. And obviously there will be a situation where you may have to face a tough time with your clients, and you must be willing to exit the contract anytime. That is how you should be prepared. If you are too passionate about contract, you will get sucked onto that, and it will consume your energy, your money, your other resources, and people will have a tough time in getting their salaries, etc. So be mentally prepared from the day you are going to sign the contract, that you are going to exit the contract if things are not okay with you. So the next point is, I'm not saying everything in the order, but I'm trying to group certain things in the order in the best way I can. So the 9th point here is that never accept any oral or email communication when the contract is active, which is contrary to the contract, or there are deviations from the contract. In that case, you rise and ensure that their internal process is followed, as well as your internal process is followed, and try to combine these two in such a way that any deviations are well documented or taken care of in the contract, so that you get paid off subsequently. If there are any deviations, uh, before you commit money onto that deviation. For example, as per the contract, you are expected to supply X amount of resources or X number of people for a particular activity, and it requires, say, instead of 5 resources, suppose it requires 10 employees to get on to do that. And if they say something orally, and contractually there are only 5 employees to be onboarded, and they are asking for 10, then there is definitely you are going to incur quite a lot of money on payment of salary for the payment terms period. So and for that, in case if you are taking a loan, it is going to cost a bomb for you. So don't assume, better you ask the contract to be revived or revised to accommodate for these 10 people instead of 5 people originally thought for. When you are signing up the contract, normally the project manager of the company will sign, and after that you can't find him. Rather, you will go to some other project like that. He keeps on hopping, and if that is the case, then you won't be able to follow up with that guy related to your payments or any issues you may face. So better always have a legal person and a finance person also signed up in your contract, and with their email IDs and their work mail ID or work contact number and office time, office address, everything. Because if it is a distributed setup, somebody may be sitting in one place, a project may be happening in another place, and if it is finance may be sitting in a corporate office somewhere. So you need to be very clear. You should know well in advance or at the time of signing the contract who are all the people who are going to comply to the contract, not just the project manager. And if there is a breach, that is my next point, if there is a breach in the contract, don't shy away in raising that and say that enough is enough. You should have that conviction about how you manage your projects. The next point is that you have to ensure that your human assets, your employees are well protected, even if they are contract basis or if they are on a full-time employment basis. So you have to ensure that the customer or the client doesn't poach any of your resources. Some organizations will have kind of a ombudsman, and if that is the case, the contract should mention when certain things can be raised with the ombudsman and who is the person at the time of signing the contract, along with the details of his contacts, like his email ID, his address, his mobile number, or whatever. And people generally will do that. I share the invoice and I wait for some X number of days and then I get paid. That model in the current paradigm, I don't think it is going to help any vendor supplying anything, any service to any client. The best thing if you can do is that you ask for a kind of escrow arrangement, and you sign up with the escrow provider, third-party provider, so that on completion of this, once the proof of delivery is done, the money has to be released to your account. Maybe there will be some charges by the escrow managements or service providers rather. So you need to bear that cost and appropriately include it in your contract or in your pricing. So escrow is the best option, but not sure how many will be willing to pay you, but you try to enforce and get into that way of things so that you don't feel the brunt. The other important aspect is that you need to be very careful about the jurisdiction. See, some organizations sitting in, for example, India and trying to do business in the US will have a court of jurisdiction in Europe. That, in my view, is a no-go. If wherever you are providing the service, you should have the office environment in that location or in that country. So you need to be very clear that you will sign for a contract which talks about jurisdiction in which you have an office, because the client will have an office or the end client will have an office all over the world. But you being a small vendor, for example, or a sub vendor, you may not have offices all over the world. So it will be very easy for your client or anyone else up in the stream in the value chain to file a case against you somewhere else in the world, and maybe make you run from pillar to post, and that is going to cost a bomb. Better you avoid that scenario. So ensure that your court of jurisdiction is where you have an office, which means that it is very simple. You need to avoid cross-border contracts. Even if you have an office, you need to ensure that you sign up for the jurisdiction only in that place, unless otherwise both the parties, for example, have a benefit if they are signing up for a cross-border. Unless otherwise, never ever sign up for a cross-border. The 18th point here is that you need to be very clear when the contract starts and actually when the contract is supposed to end. You should know very clearly, and under what condition the contract comes to an end. That also must be very clear to you. So you need to be very clear at any point in time. When you are part of the contract, at any point in time, you should know that where you stand in the contract status, whether it is ongoing or the contract is closed, or it probably is closed, whereas you are in the cooling off period, because the contract may ask you for post completion. There are kind of a moratorium where you are not expected to do something else. So you need to be very clear where you stand with respect to the contract position at any point in time. So you need to have a periodic review of where the contract or what the contract status is, and accordingly take the action. The 20th point here is that be wary of penalty clause. Okay, somebody may say that the penalties can be based on the opportunity lost or the time remaining or what you committed and what is actually delivered, something like that. But ensure that the contract value, whatever you have received so far out of that contract value, your penalty should never ever exceed that money. Because assume you have got out of $1 million project, you have got 100,000. What is the point in paying a penalty for $2 million? Okay, that's absolutely is counterproductive for your own business. So the best thing is that if you have received 100,000, then you should limit only to 100,000, or maybe that along with the milestone which you have completed or some status with which the customer has gone or proceeded further and added business value to that. So suppose it like a 5-month period, 5 into 100,000, 500,000, but with the 300,000 he has already proceeded and he has getting or reaping benefits out of that first 3 months effort. Then you should limit to only the last month or last plus 1 month, penultimate month. So you need to think through about the penalty clause, and you need to be absolutely, otherwise it will your company will go bankrupt in no time. And when the contract gets completed, you need to know who are all the parties to be notified and who has to notify, and because the contract might end whereas your invoice will be still pending. So you need to know when the contract ends, and there should be a time frame between your last submission of the proof of delivery till you get the payment. You need to know that the contract has to be active enough. And again, the contract can be based on milestones or time and material. And if it is time and material, ensure that the process compliance at the end of service of the month. so that at the end of the month, whatever is the list or list of things you are expected to complete, you or your employee has to complete, you have to ensure that all that is done. If it is on a milestone base, for example, all parties who are supposed to be part of that contract or milestone process, they need to agree on the completion of the activities, and accordingly you should kickstart the payment process. Again, people may have a milestone completion certificate or milestone completions. There may be people will call it in different ways, and you have to ensure that the sample of the milestone contract completion or certificate, whatever, that needs to be submitted as part of the contract, so that you follow exactly that. And you have to also ensure that there are no parties or uncontrollable parties, I would say, due for signing for completion. Because the moment some uncontrollable parties which are not connected with your work, then as we discussed earlier, you will be putting yourself into a dependency situation, whereas that person may not be even available for you to even contact with. Then how are you going to get the completion certificate? So you have to ensure that anybody who is going to sign up or approve the process, they need to be very, you need to be very clear rather about who are all the parties who are going to sign or sign the completion certificate. The 25th point here is that you have to insist in the contract itself that what are the governance process and what happens when there are deviations, and who are the party to the governance, and when the employee resigns in the organization, both either side, how the governance structure gets updated, who is that party, how the continuation has to be maintained. So that you need to ensure. Some service seekers would put in a word saying that if there is a breach which you come to know, you have to notify within, say, 1 week time or 2 weeks time, something like that. So you need to be alert, because if you are not alert, if you are not complying to that deviations by not notifying it, then what will happen is that they will use this as a excuse. And using this excuse, they will stop paying you. So you need to be very careful that whenever the service seeker is expecting something to be notified to the client or to himself, then you need to keep track of all such things and report at once. And generally, in terms of money, the vendor would not ask for advance. There are a number of ways by which you can do the pricing. In this video, I am not going to discuss about the pricing strategy, but definitely you can ask for some kind of advance, so that your your risk is not exposed to that level, so you can minimize the risk. The 28th point here is that your financial accounting has to be compliant to the contract activity. For example, if you are asked to do in project 1, and they are ready to pay you in as 2 heads, like the direct activities and indirect activities, like some expenses, then you need to book you need to raise the invoice with the corresponding financial head, like project 1 activities or project 1 expenses related things. But in case for some reason either the cap is achieved, or they have got a problem internally and they ask you to report against some other head, like project 2 activities, okay, and it is easier for you to raise an invoice. But when there is a dispute, because the project 2 is not in your scope of work, obviously they won't pay you. So you need to be extremely careful when under what head you are raising the invoice. And be wary of the service seeker building the case against you. So what they will do is that whenever something goes wrong, either because of the client or because of you, they will keep maintaining a log. Best thing, you also keep a log, so that you can take it up at the appropriate level, and you can declare at the contract level is that you are maintaining a project level log, and all these things are reported, so that whenever somebody is trying to build a case against you, it would be at the start, it will be very subtle. They won't even make a big complaint against you, but they will make a reference to some of the problems you have created, or at least perceived to be from the point of view of the client. And in the contract, you need to ensure that there are multi-level escalations on the project side, on the finance side, as well as on the legal side, for both the parties, both the vendor as well as the client. So ensure that you have 3 levels of escalations documented in the contract. And in case you have to bear the cost of travel or any other resources which you are going to add, like you need to add a computing thing, maybe the computers may be costly, or you need to provide a different ambience, so the workplace will be different, so there will be a cost for that. And it could be for example, employee bonus or incentive. So if all these things you need to take into account, including the leave, etc., when you are doing the pricing of the resources. But you also need to be very clear that if you are going to take a loan for this amount, then you also need to make a note that the interest payment, the amount you are going to pay as a service on that loan, that also you have to take, and you have to include opportunity cost, and everything you have to bundle out. And if together they combine the cost, if that cost is not within the scope of what do you call your company's policy on the margins, like top margin or bottom margin, you must be willing to tell your client upfront. Best thing is, in case of uncertainty, never ever take the loan, never ever take any investment in general is okay, but investment always means with equity. But if you are taking any investment within quote without equity is nothing but a loan, debt. Okay, if you are going to service the debt for such things where your cost exceeds your revenue, then never ever take the loan. Okay, and the last point on this list is that be wary of breach of contract conditions. So you need to know when the contract gets breached. So what are the conditions it could cause? So you need to track of those conditions, ensure that breach is not happening, and in case if the breach is happening, you need to know how do you notify and how do you take corrective actions to solve the problem. Okay, so with this long list of about say 33 items, now let's quickly summarize with respect to an actions. So don't be too passionate about your contract, and be willing to exit the contract anytime if you are not getting your margins. Okay, unless otherwise you have got a strategic interest. And have a contract compliance executive on as part of your organization, and ensure that he or she manages all the variations and all the deviations and all the changes which are not originally planned. So you have to ensure that this person tracks and accordingly recommend to the management whether to stop or continue the project at any periodicity which you have identified. And at any point in time, this is my third point on this action, you need to ascertain what is the liability for that period. Okay, and your liability should never ever exceed the revenues you have collected so far. Maybe if the project is long enough, probably first 1 or 2 months, maybe your liability will be more, and but it has to quickly taper down, and you should start getting your revenues. And in case if your liability graph goes up, whereas your revenue graph comes down, or the gap between your liability and your revenue is higher, which means that you are going to suffer. So that you need to be very clear, and you need to monitor periodically. And very simple, never ever hesitate to come out of the contract in case if it doesn't suit you. The very simple reason, don't assume that you have been given the contract because they can't do. Mostly of late, with respect to in the last say 5 years or 10 years, I would say, is that every company has got all the capability to do that, but they can't do that with the level of what you call the profitability they aim for. So they try to get a vendor who can do it at a lower cost, maybe within quote higher quality, but they want to they don't want to rather take risk on cost. That's why they offload the project to you. So don't assume that they don't have the capability and only you have the capability. Not that way, not really that way. Might be some exceptions may be there, but you need to be very clear that they are giving the project only to ensure that they don't take the risk, whereas they pass on the risk to you. So you be wary of all these things and take appropriate action. And this is particularly important if you are in a small scale business at a senior level, or you are an entrepreneur, or even maybe you are a vendor to some organizations. You need to be very careful about signing the contract if you are an authorized signatory for your company. And if you are an entrepreneur, you must ensure that you don't fall into this trap. Thank you for watching. See you in the next video. Cheers. This is Gokul.